Okay, welcome back. In the last video, we completed the first page of the worksheet where we did our journal entries and our AJEs. Now what we're going to do is these are our T accounts from Module 3. We're just going to pretend like it's the next month, and all of the transactions we have are the ones on that first AJE tab that we just did. Okay, so we are going to now put each of those transactions, and we're going to add to our existing T accounts. So we're just going to take the first one. We debited accounts receivable and credited unearned revenue for $48,000. So I'm going to find accounts receivable. Let me see. And this transaction was on 2/1. So I'm going to put the date. We're doing dates instead of transaction numbers this time. Either way is totally fine. Wait, it was 01, right? 01, 2020. And we debited accounts receivable for $48,000. All right, now I got to go into my liabilities, which are right over here. And on 02/01/2020, I credited unearned revenue. So I'm going to put it over here on the right-hand side, $48,000. All right, let's go back. On February 1st, we debited prepaid expense and credited cash $1,800. So I'm going to go to my assets section. Here's my prepaid expenses. So 02/01/2020, and I debited $1,800. And then over here at cash, 02/01/2020, I credited, because I paid cash, so I'm going to put it on the right-hand side, $1,800. All right. So now going back, our third transaction is we purchased equipment for $3,600 cash. So we debited equipment $3,600 and credited cash $3,600. All right, so I'm going to my equipment. Oh my goodness gracious, I have so many assets now. It's actually on the second row. So on 02/01/2020, I bought equipment for $3,600 and I paid cash. So 02/01/2020, and I paid $3,600. So it's going to be on the credit side, on the right-hand side. All right, now we got to book our AJEs. On 2/29, I recognized 1 month's worth of revenue from that unearned revenue. So I debited unearned revenue $2,000 and I credited revenue $2,000. So I'm going to go to unearned revenue, and on 02/29/2020, I reduced my liability by $2,000. And when I did that, and I'm just going to copy this date over so I don't have to keep typing it in, I recognized revenue for $2,000. So $2,000. All right. Then on 2/29, I also recognized insurance expense of $150,000. So I debited insurance expense and I credited prepaid insurance. Okay, so I'm just going to go over here to my expenses and add the insurance expense for $150. And I am going to credit my prepaid expense because now I have less of an asset. I've reduced my asset and booked $150,000 to expense. All right, then I recognize 1 month's depreciation expense. So I debited depreciation expense $100 and I credited accumulated depreciation $100. So let me go back to my T accounts. I'm going to go down to my expenses first and date in there, $100 depreciation expense. Now my accumulated depreciation, remember, is a contra asset. So it's going to be up here with my assets, even though it's going to have a natural credit balance. And I'm going to put my $100 as a credit under accumulated depreciation right there on the right-hand side. All right. Then I had to accrue revenue that I haven't billed yet. So I debited accrued revenue and I credited revenue for $40,000. So if I go to my T account, I go to my accrued revenue. I'm just going to be up with my assets. And it's right here. So put the date in, and it's a debit, because remember, it's just like accounts receivable, but we haven't billed it yet. So that was $40,000. And I'm going to credit that to revenue because we actually earned that revenue. So the whole thing's going into revenue as a credit on the right-hand side. And finally, we debited legal expense $3,000 and credited accrued expense $3,000. So my legal expense is going to go right here, and I debit that on the left-hand side. And then my accrued expense is going to be up here in my liabilities, because remember, accrued expense is just like accounts payable, but we haven't received the bill. So we're going to credit that $3,000. Okay, that's all of the transactions we have to add. But we're not done yet, right? Because now we have to add up our T accounts. So I'm going to go ahead and do that. So let me see. So I'm going to do equals sum debits minus sum of my credits. And I have got $16,600 left in cash. Okay. My accounts receivable. I can probably just copy this formula. So I'm going to copy that formula over. Oh, this is pretty nifty. Paste, copy, paste, paste. All right, and going down. All right, and then I've kind of got some new spacing here, so I'll go ahead and just type it in. I know I don't have any credits, so I'm going to go ahead and only do that part of the formula. I'm not sure why these numbers are so small, but why don't we go ahead and make them a little bigger. All right. Accumulated depreciation is $100. Accounts payable. We didn't do anything to accounts payable, so we just are carrying forward the balance from last time. Accrued expenses is $3,000. Unearned revenue. Okay, so now unearned revenue has a natural credit balance because it's a liability. So I'm going to do equal sum and add up all the credits minus the sum of the debits. Okay, so I end up with 46,000. So remember up here, when we did cash, I added up all the debits and subtracted the credits. Down here, my liabilities, which have a natural credit balance, I'm going to add up the credits, subtract the debits. All right. Rocking and rolling. All right, so stock is 100,000. Let's just do this. And copy, and dividends are unchanged because we didn't pay another dividend. We added a little bit to our revenue, so now we're up to $112,000 in revenue, and we added to our expense as well, so now we're at $11,250. All right, so that is our T accounts. In the next step, we're going to take these and drop them into the trial balance. And if for whatever reason you haven't tried this worksheet on your own, maybe think back to what we did in Module 3, even go back and review it and see if you can go ahead and drop these into the trial balance, and then come back and check in with me and we will look at it together. All right, see you then.